you need to think about all of these aspects when you make an investment. And I think that's a popular misconception that people have of the precious metal market. They perhaps invest in gold, a gold miner, and sure, if the gold price goes through the roof, then chances are the share price will improve. But it's not all about that. There's a lot of
Ladies and gentlemen, welcome to the special interview. Today we have a returning guest to the show, Simon Popple of Brookville Capital. Simon writes the Brookville Capital newsletter, and I got to tell you, if you're trying to navigate the stock market and especially the gold and silver mining sector, you're going to need a system. It's not just picking stocks. It's not just looking at a chart and talking about Fibonacci retracement, but it's about what do you do to choose what companies are best for putting in your portfolio. And Simon has a system, and it's heavily focused on education. So I highly encourage everybody to check out brookvillecapital.com. Links will be in the description below. Simon, I'd like to thank you for returning again to Silver Doctors.
Great to be here.
Now, Simon, I talk about the importance of having a system when it comes to the miners because, I'm looking at the miners, and it really is a mixed bag. And I want to talk about a few different miners, and I want to talk about one country just to give you an example so you can maybe help clarify a few things for us and for our listeners. Let's talk about silver companies in Mexico. And, depending on what a person does with their investments, right? I'm looking at, for example, Great Panther Silver. Okay, Great Panther Silver just in March was $1.19 a share. Today it's under 50 cents. So, investors would have lost half their money in Great Panther Silver. Endeavor Silver Corp, another silver mining company in Mexico. A year ago, to open the year, their share price was $2.15. Today it's $2.26. So it's basically unchanged year to date. Then we can go into another Mexican silver company and talk about First Majestic Silver. First Majestic on November 30th of last year bottomed at $4.59. And today I checked this morning and it was $9.69. So my point here in drawing this out longer than it probably should have been drawn out is this. If you would have chosen one of these mining companies, you'd have lost half your money. If you would have chosen another one of these mining companies, you would have basically been unchanged and broken even. If you would have chosen a different mining company, you'd be up twice on your money. So my question to you is, how hard is it to pick gold and silver mining companies when we have such mixed volatility and that some of them appear to be doing really well and some of them appear to be doing really badly? Talk to us about the mining sector and some of the issues with navigating the mining sector, Simon.
Absolutely. Well, I think one of the key things is as you said at the top of the show, you kind of do need a system, and it needs to be a sort of disciplined system. I created something known as a bridge system, which stands for balance sheet, resource, infrastructure, diversity, grade, and exploration potential. And I'm not saying that's an exhaustive list. Of course, there's other things you need to think about, but I think the point is you need to have a structure about how you analyze these companies. And especially, when you're looking, at the companies you mentioned, people need to have a process about how they look at them, because all mining companies are different, and I think that's one of the problems that people have, or the misunderstandings that people have, that, they'll look at Endeavor, First Majestic, or Great Panther, and they go, okay, right, they're all silver companies. It doesn't really matter. But I think silver's going to go up. I invest in one of these companies. But it's actually far more complex than that. All these companies are different. They've got different assets, different ores, different cost bases, and you need to think about all of these aspects when you make an investment. And I think that's a popular misconception that people have of the precious metal market. They perhaps invest in gold, a gold miner, and sure, if the gold price goes through the roof, then chances are the share price will improve. But it's not all about that. There's a lot of ingredients that go into the cake, and I think people need to be aware of those and kind of understand the risks that they're taking.
Yes, and that's very interesting because when you look at it from like like the point of view of like, some people who are getting into this are simply picking names because it's got a cool ticker symbol. Some people are looking at, well, Great Panther's, less than $1, so I can buy a ton more of that than I can of First Majestic. So my point is that people do some things that are not really based on analyzing the companies, but that are just based on what they like or something that strikes with them. And that's not really a way to be investing in the mining companies. So when you talk about your system, what are a couple of the key things that you focus on in your system?
Well, I mean, as I say, I look at the bridge system, which I think is a useful framework. But really simple stuff like the resource. People can quite easily have the wool pulled over their eyes because they see a resource of, let's say, 1 million ounces of gold, and they think, oh, that's fantastic. But it has to be from economic deposits. And if that 1 million ounces is from a couple of deposits, chances are that, well, there's a good chance they'll be economic. But there are companies out there where you've got 1 million ounces, but they're across 6, 7, 8 deposits, which means that none of them are actually economic. So I think the market generally is pretty smart. And if a company is trading at a discount to its peer group, there's normally a reason for that. That's just one example. Another could be, there may be a contingent liability of the company. So you need to look in the report and accounts and just find out what's going on. But, you do need to look under the bonnet. And I think under the bonnet is actually, it's more complex than, a lot of people think.
Mm-hmm. That's very interesting. And another thing that I'm thinking about here as you're bringing this up is, spread out in different locations or grades. But I'm also thinking there are also wild cards in the mining sector as well. And let's stay on the miners in Mexico for a second, because I want to make a point here. Did you hear, this is making a lot of news in the United States right now, but there was like an American family that was massacred like 100 miles south of the border in Mexico this week. And there were like 9 members of this family that were all murdered by like the drug cartels, right? So that's point one. Point two is, a few years back, Mexico had a really nasty earthquake. I mean, buildings in Mexico City were just collapsing and, thousands and thousands of people died in this earthquake. That's point number 2. And then point number 3 is, sometimes we get protests, right, when it comes to like water rights or land usage rights. So I guess my question is, is there also a sense of having to be nimble when you're looking at the gold and silver miners? Because, if there's an earthquake, there has to be something that could affect these mining operations. Or if there's a lot of cartel violence that happens around a mine, there has to be something that's kind of like a curveball, or if there's protests. So talk to me just about, it's not just something that buy and hold and forget about it, but you actively have to be thinking about these different scenarios. Am I thinking about that correctly here, Simon?
Yeah, no, absolutely. I mean, I think that Mexico, with gold and silver, people tend to gravitate perhaps towards, Canada, the US, and Australia, because they're viewed as perhaps some of the safer jurisdictions. But silver, Mexico is the largest silver producer in the world. And so if you want to have silver, most of it is in Mexico. So you are, you naturally have to invest in Mexican companies if you want a diverse exposure to silver. But no, you're absolutely right. I mean, there are a lot of other issues that you need to take into account, and I think the market is pretty good at taking these things into account. But it's hellishly complex. That there's a personally, I think that silver, if you've got a mine in Canada, US, or Australia, then ounces in the ground, it's probably worth more than a mine in Mexico, simply because you've got some of these other issues that have to be taken into account. And, sometimes they'll have an impact on the company, sometimes they won't. But I think it's very difficult to sort of provide a value or a cost of dealing with, whatever the issue is.
Mm-hmm. Very interesting. And, what this is making me think of is, the importance here is an investor, in my opinion, would want to have, a core position of actual physical gold and silver before they start going into the mining sector. Because of the fact that, some of these companies, as we're talking about, have gone down, by half over the course of the year. So, would you agree with that? Would you think that you would have to have that core position of gold and silver before branching off into going into the, more speculative side of things there, Simon?
Yeah, absolutely. I mean, the way I look at the market, I mean, in the UK, we have what we call a fantasy football team. So football, obviously, you've got goalkeeper, defender, midfielder, and forwards. And, I'm sure you've got something similar in the US with the NFL. But, I mean, I think what people need to do is have a blend of all stocks, depending on how much risk they want to take. Because on the one hand, if you want to take a low risk, then you're absolutely right. Have some physical gold, physical silver, and then you have some of the largest producers, and then perhaps a few of the larger producers, which the largest I'd have as my goalkeepers. The larger ones I'd have as defenders. But then if you want to speculate more, then I have what I call the midfielders, which are perhaps new producers, and then the forwards are your out and out explorers. It's obviously much higher risk. But it really, the returns can be amazing if you get it right. Mm-hmm. But people need to sort of think about how much risk they want to take on, and sort of what they're really looking to achieve.
I think that's a great analogy, because what I'm thinking about when you're saying this is, I'm thinking about the shooters, right? The guys that are going to be like scoring the goals and stuff like that in soccer. I'm terrible with soccer, so please excuse me if I'm using the wrong terminology. But what we were just talking about, these incidents, it's almost like, if these more volatile, more speculative, smaller miners, for example, a couple of these miners in Mexico or something like that, it's almost like if they're their forwards or the ones that are playing offense, these events that we just spoke about would be like a season-ending injury, right? So like an earthquake that shuts down mine operations would be the equivalent of that forward having a season-ending injury. Is that a way that I could be thinking about that there?
Yeah, no, I agree with that. And I think also you kind of, you have niggling injuries which will stop you, from enjoying a company for a short period of time. I'll give you a cracking example. In Canada, because of the very cold weather, there are, certain projects that they can only drill for certain times of the year. So, what tends to happen is, as soon as investors realize there's no news flow for the next 3 or 4 months, they're looking to get out of that stock and into another stock where there's going to be some news flow. So, yes, I mean, they are like players. Sometimes they have a niggling injury. Sometimes it's, an injury that's going to take them a long time to recover. And other times, it's a career-ending injury. And, that's something you've got to be incredibly careful of, especially in places like Mexico.
Yes, that's very interesting, because, you listen to some of the billionaires talking and they make it just sound like it's so easy, right? You just go buy some mining companies and then you're going to get rich. So I appreciate you sharing just the difficulties about this. And that leads me to think, yes, people really do need to have, whether it's your system or just some sort of strategy, people have to have a strategy in general if they're getting into the miners. That's the overall point here, I think.
Yeah, absolutely. I mean, just to add to that, I mean, if you don't have strategy, it's a bit like playing football or NFL without, American football without a goal. You've got to have something that you aim towards, and you've got to understand, what your team is, and what the strengths are of various players, and what position they're in, and it's incredibly important. You can't just go out and buy a bunch of miners and just hope to become a billionaire. It's highly unlikely to happen.
Yeah, and I made the point earlier, but as much as I'd like to think that it's not happening, some people are making the decision, well, I can get 10 times as much Great Panther as I can First Majestic. So the point is, don't make investing decisions because of weird little quirky things like that. Switching to gold and silver, just in general, the metals in general. Simon, this has been painful since early September. When is this pullback? When is this correction going to end, Simon? What's your outlook on gold and silver right now?
Well, it's very interesting. I mean, let's deal with silver first, because a lot of people look at the gold silver ratio, and at the moment it's kind of hovering around 84ish, which is high. It's if you look at the average of the 20th century, I think it's in the high 40s, probably about 47, and in this century it's sort of hovered between about 50 and 70. So having a ratio of 84 is high. If you look at like the average of this century, between 50 and 70, so if you take, let's say, 60, then that would have a significant improvement on the silver price. Mm-hmm. So I think that's one thing that people need to think about. The other is the gold price. With so much uncertainty in the world, I think we'll get onto that in a minute. But I mean, gold tends to do well in uncertain times. People do like to have an allocation to gold when they don't know what the future brings. And I don't think it's ridiculous at the moment to have perhaps up 1% at least of your wealth in gold, because no one really knows what the future is going to bring. And the tried and tested method of sort of switching from equities to bonds, with the negative yields on bonds or very low yields on bonds, and the huge debt in the system, means that that may not be the smart move it used to be.
Yeah, Greek debt is negative now. I mean, come on, they're still under austerity and they're offering negative yielding bonds. That's just amazes me. Yeah, what I'm seeing, Simon, are on the one hand, I don't know what is coming out of the mainstream media right now, across the pond. However, on this side, there's a lot of optimism that's coming out of the mainstream media right now, particularly trade deal optimism. And then in conjunction, we've hit like record highs in the stock markets and all three of these indexes, the Dow, the S&P, and the NASDAQ. I want to say every single day this week. I mean, I could be off, but literally it's just high after high after high after high. So there's just, everybody was looking for this major market crash in October, and now there's this newfound optimism. And I find it very peculiar. So, I want to ask, and where you are, there's been a lot of uncertainty around Brexit. Is there still this uncertainty? Is there a kind of newfound optimism? Can you give us a status on Brexit and just what the general feelings about how the economy is doing right now?
Well, I mean, I think first of all, there's frustration that things haven't resolved themselves, and I think that one or two things will happen. Either we'll leave in January, or will remain. And obviously we've had a referendum, and so to stick with the referendum, we leave. There's various people out there looking for a second referendum, and if they win the day, then obviously we'll have a second referendum. But I don't necessarily think that'll give a different result. But unfortunately, there's just huge uncertainty, and people are finding it difficult to plan for the future, especially businesses, because they don't know what the future is going to look like. And so I think there's a lot of frustration, and people want the politicians either to leave or stay, whatever it is. We just need to remove this uncertainty so people can plan for the future.
Mm-hmm. Yeah, and that's very interesting because we have, on the one hand, no concept of the time value of money, right, with negative interest rates, and on the other hand, we can't even we can't even plan for the future. So we're really in this pickle here. Like, how do you look ahead when A, you can't even make you can't even earn any interest on any saved money, and then B, you don't even know what the currencies and what the makeup of the governments and the countries are even going to look like in the future to begin with. So, despite the optimism that seems to have surged here in the States, it seems like there is still a lot of dominant uncertainty around the world, if I'm understanding that correctly.
Yeah, no, I think that's completely correct. I mean, I think, I'd also throw the trade war into that bucket as well, because, because of the US and China and what's happening there, people just don't know where to invest. Do they open a factory in China? Do they open it in Singapore? Obviously, the Chinese market is vast. People want to have exposure to it, but until the trade war plays out, it's very unclear as to what they should be doing. And I mean, Brexit, by comparison, is tiny to what's happening with the US and China. But I think there's quite a lot of these situations panning out around the world where people just don't know where to allocate their capital. And until we've got clarity on that, it's going to be a bit of a mess.
Yeah, and we don't have clarity on that because I just want to give one specific example. Last week the Fed cut interest rates for the third meeting in a row. So we've now had 75 basis points of rate cuts, the third meeting in a row. What's happened since then? The dollar index has shot up. It's absolutely amazing. So the Fed is openly debasing the currency. They're engaging in this T-bill purchases. They're intervening in the repo market, and the dollar's surging. Conversely, right, just the Bank of England, I think it was just yesterday, held rates steady, although two members voted to cut rates. So here's my point, right? In the Fed, or in the States, the Fed cut rates for a third meeting in a row, dollar surges. The Bank of England holds rates, and all they do is, a couple voting members talk about maybe cutting, and the pound plummets. So it's like, this adds to the whole uncertainty with, people can't even really hide out in currencies anymore, because what would traditionally theoretically happen, right? When currency is debasing, when they're printing up money, that's not good for your currency. So this adds another level of uncertainty. So I guess the question is, how are you looking at the British pound? How are you looking at the euro? How are you looking at the dollar? And do currencies play a factor in your decision making here?
Yeah, I mean, I think that on this side of the pond, if you think about it, everyone's paid in pounds. Their pension is in pounds. Their most valuable asset, which is probably their house, is in pounds. So I think that if the pound goes up, people generally will be pretty happy. But what they need to protect themselves from is the pound going down, and that's why I like gold as something that people should think about, because having an allocation to gold, which is obviously priced in US dollars. So if providing the gold price remains relatively stable, if the dollar goes up against the pound, you've won, and you only lose when either the gold price goes down, but if it goes down, it depends on how much the pound goes up. But if you look at it purely from a point of view of the pound going down, I think it's not a bad position to have at least some of your money in, because most people, as I say, they've got a lot of their assets in sterling. Their investments are probably fairly global, so they've got exposure to the US dollar and the euro and perhaps other currencies. So I think that in these sort of uncertain times, just spreading your net a little bit wider than perhaps you used to, by having some allocation to a precious metal such as gold or silver or both, is no bad thing.
As we wind down 2019, Simon, it's been a very interesting year because, gold and silver didn't do much for the first 6 months. And then we just had 3 months of excitement, and it was a fun run from June through the beginning of September. And now we've been in just this grinding pullback, correction, consolidation, however people want to call it, right? Silver down over 13%, right? That's solid correction. I don't even want to say we could get into a bear market within the course of a year, but that would just be amazing if we did. But anyway, my question is, what is going to be on your radar as we're coming into the end of 2019? Because a lot of the people in the gold and silver space are talking about record high gold prices in 2020, but we've been just in this brutal pullback, and it seems like it's never going to end. Silver's under $17 again today. I'm looking right now; they got down to $16.66 in the early morning hours. So I guess my question is, what are you going to be looking at as we come to the end of 2019 so that in early 2020 we can catch up with you on what's on your radar?
Yeah, no, absolutely. Well, I mean, I think that, for both gold and silver, their better days are ahead of them rather than behind them. So I think that, we should have an appreciation in the price. If you look at the fundamentals, everything is sort of pointing in that direction. The sort of $1 million or $100 million question is, when? And I think that's what surprised everyone, that any uptick or really sustained uptick in the price hasn't happened yet. So I think people need to be patient. I think it makes sense to have some cash, because if we ever have a real capitulation in the miners like we did in 2008, you'll feel a lot better if you're investing some money when they're a fraction of the value they are now, should that ever happen. And if it doesn't happen, and you get the kind of lift off that we had in sort of 2011 and in the late 1970s, then quite frankly, you won't really care about your cash position, because you'll be doing so well elsewhere. So I think it does make sense to have a little protection in terms of some cash, but I haven't lost faith in the sector. I think there's some very good days ahead for it.
Simon Popple, I'd like to thank you for joining us again on Silver Doctors.
Thank you very much.
I totally forgot about the time change, because we turned our clocks back last week. So I was thinking that I was going to be calling you at 9. And if I didn't quickly check what time it was in the UK, I'd have been like, oh my goodness.
No, it's